So good afternoon, friends. We shall take up as part of advanced accounting under accounting standards in AS5. Sorry, AS5. So as I'm handling more classes for final, I tend to use the term in the AS. So understand what I mean as AS5 only. AS5, the title for that being net profit or loss for the period, comma, prior period and changes in accounting policies is the title. Let me tell you that AS5 focuses on profit and loss account. And it focuses on 5 items. You can easily remember 5 focuses on 5 items. You don't have to just remember better than this. First one is ordinary item. Next one is, when you say as one is ordinary, the other one is extraordinary. Next one is prior period item. The next, changes in accounting estimate. The other one is changes in accounting policies. Correct? There are 5 items that would be affecting P&L account, which are 5 in numbers. As you identify, they are ordinary, extraordinary, prior period, changes in accounting estimates, changes in accounting policy. Correct? What is to be considered as ordinary? So what is that you consider as ordinary? Any activity which are undertaken by an entity as it's part of business, and all such related activities incidental to in carrying out this activity. So all items which are considered to be the main operation as well as incidental operation. See, if you consider the company is a farming company, they are into agriculture where they specialize only in paddy. What is their main objective? Main objective is to cultivate paddy. Alongside of that, they concentrate on husk also. Incidental activity. Their main operation is not only incidental. Incidental comes alongside of the main operation. Even that will be considered as an ordinary item. So any activity which is undertaken by an entity which is forming part of its main business and all such related activities in which the entity is doing further operations which are considered to be incidental or arising from these activities. For example, when you consider harvesting, you have harvesting machine. You are giving that harvesting machine for rental. So you don't say that it is not related to your main activity. It is related incidental. Like how in costing we used to have joint product and byproduct. Likewise, main activity and incidental activity, all are ordinary activities only. Correct? So now, what is it we will understand from ordinary? Say you say any activity undertaken, any activity undertaken by an entity as a part of its business, and such related activities and are incidental in to the main activity are all to be considered as what? Ordinary activities. Two people would like to know extraordinary. What is an extraordinary activity? Other than ordinary is likely to be extraordinary. But is that the way that we are going to tell? Extraordinary items are distinctly different from ordinary activity. What is that? Distinctly different from. They are likely to occur infrequently. So please be careful. There is only an ancillary point. You should not misunderstand that all those infrequent items are extraordinary items. See, what I am trying to say is that a child is expected to be shorter than the parent at the early stages of the life. That is what I generally we mean. But a child may be taller than the parent after some point of time. What is generally conveyed, you should not misunderstand. Extraordinary items may be infrequent in nature. That does not mean all infrequent items are extraordinary items. So have that in your mind. Many a times students used to tell, sir, this is infrequent, so therefore it is extraordinary. Extraordinary items sometimes would. What is that? Sometimes would be infrequent in nature. You should not take all infrequent items as extraordinary. So have that in your mind always. It should be disclosed separately because it is extraordinary in nature. Should be disclosed separately. Correct? People might ask this question, sir, can you give a example for extraordinary item? Extraordinary item could be an accidental item, say an earthquake, or attachment of property of the entity. These are the examples that they have provided in the Institute study material, therefore I am using it. Can you consider sale of an asset as extraordinary? No. Buying an asset is part and parcel of your ordinary activity only. Selling them will also be an ordinary activity. Even though sale of your PPE may not be occurring frequently, just because it is infrequent in nature, you cannot consider that as extraordinary item. So it all depends on the nature. One cannot be telling that just because they are infrequent in nature, we should take it up as extraordinary. Okay. Then prayer period item. What is a prayer period item? This is related to one or more previous year. This is related to one or more previous year affecting current year's profit and loss account arising on account of error or omission. Related to one or more previous year affecting current year's profit and loss account arising on account of error or omission of the earlier years. Correct. Example. What is an example that we can provide? Understatement of closing stock value of the previous year. Related to one or more previous year? Yes, it related to last year. Affecting current year's P&L account. How it will affect the current year's P&L account? Because that becomes opening stock for us. Arising on account of error or omission. Some totaling error or one page not taken or one page was taken 2 times. Some error. So this item has got to be very careful in its handling. I mean, prior period item should be stated as if it is a current year item. What is that? The nature and amount of prior period item should be separately disclosed if it were to affect the current year's profit and loss account. If it is an ordinary item, no. I mean, if it is not affecting their current year's profit and loss account to a very great extent, if it is not material, okay, affecting P&L account is very great. That's a point that we are hitting, but not substantially, not significantly, not. The nature and amount of prior period item should be disclosed separately in the statement of P&L account in a manner that their impact on the current year's profit or loss can be understood. So that means compulsorily we got to state. Then next one is changes in accounting estimates. What do you mean by changes in accounting estimates? Say, accurate measures are not possible in accounting. Accurate measures are not at all possible in accounting. How come? You create provision for your warranty, guarantee and all that. I sold my laptop, 1 year guarantee I am providing. I would have sold the laptop all through 365 days. From the date of sale, 365 days time will be there for warranty and all that. So that warranty period will expire only in the following year. How much will be my expenditure to carry out my promise? I do not know at the end of the year. Should I consider that as next year's expenditure? No. The profit making is booked in year of sale. How come the expenditure can be considered as expenditure for the following period? Because of the warranty only they have purchased. Because you have induced that 12 months warranty they have purchased. You cannot keep the profit in year number 1 and take the expenditure for replacement and conduct of repairs in year number 2, which will be not at all compatible for your matching concept. The related benefit and the cost should be booked in the same period. Just because you do not know the final figures, you cannot be telling, I will not account it here. Sir, how come I know all this, sir? You cannot ask that question. Then what is that we should do? You are expected to estimate. I estimate my provision for such warranties based on the past as 1 lakh of rupees. Ultimately, it turned out to be 70,000, or ultimately it turned out to be lakh and 25,000, whatever it may be. Actual expenditure will be different from that of the estimate. Nobody in this world can exactly estimate. It is an oxymoron. What is an oxymoron? Exact estimate is not possible. People used to say is exactly estimated. No. Nobody can exactly estimate. Correct? People used to say pretty ugly. Pretty is beautiful. How pretty ugly you can take up? Then they will say small crowd. Crowd is always big only. But people say small crowd. Pretty ugly. What did I tell in this particular case? Exact estimate. Then my oxymoron I will tell this way. Married and living happily. Happiness will go. You can't take decision based on your whims and fancies. You have to take the permission of the other partner. Anyway, coming back to this case, depreciation is an ideal example for this estimate. I have estimated initial salvage value of the asset. I have estimated the life of the asset based on which I charge depreciation. 1 year end, I may change my decision regarding the life of the asset. I can review the life of the asset, and based on that, the depreciation charge might go up or come down. So please just understand where actuals are not matching with that of the estimates. Difference between the two. So is what? Judgment error. So many a times people used to get confused with prior period item and changes in accounting estimates, because this estimate is related to one or more previous years, which is affecting the current year's P&L account arising on account of error or omission. So this is a judgment error. So always remember, judgment error is not an error at all. Correct? No mind. Accounting estimate by their very nature are approximation that may need revision as additional information are pouring in. Correct? So therefore, what is that we should consider? What is that treatment that we should provide? So here example I can tell. Provision for warranty, guarantee, etc. Right? Provision for warranty, guarantee, etc. I am providing. Even depreciation also. So here we have to do always on a prospective basis. That is, adjust only on prospective basis. No retrospective basis. I cannot redraft my past profit and loss account. I can do the effect only in the following period. Correct? Correct? If it is material, disclosure is required. If the change is material, disclose, or else ignore. sometimes it becomes impractical to quantify. If impractical to quantify, disclose the fact. See, sometimes we may not be in a position to know what is going to be the court judgment. We will not be in a position to provide clearly. So we have to state that. Next one, the last one is item number 5. Changes in accounting policy. What do you mean by policy? Any item or any information I would like you people to tell about what do you mean by accounting policy. What is that you understand from accounting policy? Accounting policy is a policy of accounting. People might just say. See, now I will tell you what is policy. See, anywhere there is in the audit place and all that, they say this is company's policy. What is company's policy? What do you mean by policy? Choice of method to follow a principle is called as policy. What is that? Choice of method to follow a principle is policy. For example, I wanted to be an patriotic person. How can I express my patriotism? Well, national anthem means stand direct and recite it. But in how many places you get that opportunity? Then in day-to-day life, you can do that. Traffic violation you don't make. Even when that is red, when nobody is there, better wait. You're a patriotic Indian. Don't expect Prime Minister to say that India should be clean. Swachh Bharat. You should be clean. While traveling on the national highway, after having food, you just don't throw it on the wayside. You put it in the dustbin. There are various ways. Choice of the method to follow a particular principle is what you call it out as a policy. I have a policy. What policy? I don't take sweets which are white in color. I may eat jaggery. I may eat sugar candy, but it's not that white as ordinary sugar that you are getting. One of my friends said, no, I am just taking brown color sugar, not brown sugar. Brown color sugar. Policy. What do you mean by accounting policy? So, application of method of accounting to follow a principle. Charging depreciation for which I have various methods, WDV method, straight line method, sum of the years digits method and so on. Choosing WDV is my accounting policy. If I follow cost method for valuing my inventory, what do you mean by cost? People will ask is whether it is FIFO or weighted average. Choosing weighted average is my policy. I can as well choose straight line method. There is first in, first out. Correct. So, where there is a change in the accounting policy. Now, firstly, I will write accounting policy is the choice of method to follow a principle. Follow an accounting principle. Correct. So, have to be done on what? Retrospective basis. Are you understanding? Have to be done on a retrospective basis. Adjust in the current year P&L account. Correct? Why would change be there? See, accounting policy I told. See, they are changing from WDB to straight line method. What really prompts them to change it? Accounting standard might have been amended. Therefore, we are following that policy. Or when it is considered that the change would result in a more appropriate presentation of financial statement of the entity. See, what really drives me to change is that if change is made, it brings about more appropriate presentation of the financial statement. Like, see, sometimes we should be misunderstanding certain things for as change in accounting policy. Please understand, any change in the accounting policy which has got a material effect should be disclosed. Correct? The impact of on the adjustment resulting from such change, if material, should be shown in the financial statement of the period in which such change is made. In this particular year, change made means in this particular year, the impact has got to be shown. Correct? When the effect of such change is not ascertainable for some reason, either wholly or in any part, the fact should be conveyed. Because I would not have started charging depreciation at all. That is likely to have impact only in the future. So therefore, there is no need for me to quantify, but I got to disclose this matter. If a change is made in the accounting policy, which has no material effect on the financial statement of the current period, but which is reasonably expected to have impact in the later periods, the fact of such change should be disclosed appropriately in the period in which change is adopted. Correct? Are you understanding it? Only this much you do have. Adjust in the current year's profit and loss account. Disclosure is required. If affecting current year P&L account, or else disclose the fact. Correct? So with that, the theory portion of AS5 is over. Now let us just discuss once again. Ordinary activity, where it is to be disclosed. Ordinary activity, whether it is to be disclosed. The answer to that question is generally no. But there are certain cases where you got to do. Even ordinary activities are required to be disclosed. What are those? Write down of inventories where NRV of an inventory is less than the cost. Because cost or NRV, whichever is lower, no. So when NRV is less than the cost, I got to disclose. Ordinary item only. Similarly, in the following year, what will happen is that NRV would have gone up. I am expected to bring it back to the cost. Because of the fact that an inventory is written down and followed with in the next year it is reversed. In either case, we have got to disclose. What will happen is that When I am putting the NRV as the value for the inventory, where cost is say 100, NRV is 90, 10 rupees loss I will be booking. The reader will understand that I booked cash loss. Actually, it is not cash loss. It is only valuation loss. Next year, that 90 rupees opening stock we will bring it back to 100 when NRV is greater than 100. So there will be 10 rupees increase in the profit in the following year. And people will think that 10 rupees I have made cash profit. Neither I have made a cash loss in the first year, nor a cash gain in following year. Therefore, certain things are expected to be disclosed. This is one of those items. Next item is restructuring of the activities of an enterprise and the reversal of any provisions for the cost of restructuring. Restructuring in the sense the company might feel that the existing production operations are not on the expected lines, efficiency levels are on the lower side. They would like to introduce just-in-time policy. Because of that, their operations are changed. So restructuring activities when they are carried out, it is part and parcel of any activity. See, for example, every 4 years, 5 years, they review the production plan, business process, business model, etc. and make those changes every now and then. And having decided, there is always a chance that they may reverse the original decision. Similarly, disposal of PPE, then disposal of long-term investments. Such legislative changes having retrospective application, litigation settlement, other reversals of provisions. So these items, though ordinary in nature, they are expected to be disclosed. Extraordinary, because of the extraordinary nature, it is to be disclosed. Prior period item normally to be disclosed. Changes in accounting estimate only when it is material, it should be disclosed, otherwise not required. Changes in accounting policy, yes, it should be disclosed. So these are the matters for those 5 items in AS5. So with that, we are just finishing the theory portion of AS5. Okay. They are very clear for you. Thank you.